When Warren Buffett buys a new stock for Berkshire Hathaway's equity portfolio, it's certainly worth paying attention. But it's probably even more of a good idea to be paying attention when he's held a stock for decades, as this is probably much more convincing evidence that the company concerned enjoys durable competitive advantages and is an extremely high quality business. So American Express, which I'll be covering today, is a company which Buffett has continuously owned stock in for almost 30 years, and today it represents the fifth largest holding within his portfolio, and he's got a 20% ownership stake within the company. But what does American Express do, and why does Mr. Buffett like the company so much? As you're probably already aware, American Express is a financial services company specialising in the provision of credit and charge cards to consumers, small businesses, mid-sized companies and large corporations around the world. It was established back in 1850 and initially specialised in express delivery services before introducing the world's first traveller's cheque in 1891. However, it wasn't until the late 1950s that it got into the credit card business, and in that capacity, it was the first company to produce an embossed plastic card in the form we're familiar with today. Surprisingly, before this innovation, credit cards were basically just pieces of paper. Today, credit cards are still the company's core business, but it's now expanded operations to 103 countries and territories, and there are approximately 71 million American Express proprietary cards. And what I mean by that is that these are cards which are issued directly by American Express with no intermediary. And there are also around 50 million cards issued by third-party banks and other institutions on the American Express network. And so there are about 120 million cards. The vast majority of the spending on those cards is on the proprietary cards, with 1.1 trillion being spent annually. And there's about 200 million being spent on the third-party cards. So interestingly, you can see here that about 30% of the network volume is coming from outside the United States, and 70% is, or the majority, is coming from the United States in terms of the spending. Breakdown between the consumer and the commercial sides of the business, and you've also got the network services, i.e. the cards that are not being directly issued by American Express, so 50% consumer and 41% commercial. So I just want to talk about the company's competitive advantages now, and there's three of them essentially. It's the partners of the American Express brand, the spend-centric model, and the American Express brand itself and their dedication to service excellence. So in terms of the partnerships, they work with a range of business partners, and the idea there is that they want to make the platform more relevant by having partnerships with these corporations. So these include Delta Airlines, Marriott Hotels, Hilton Hotels and British Airways. Those are just a couple of them. And effectively, these partnerships let the card members earn points with these partners, so sort of air miles and that sort of thing. Or, for example, with Amazon, you can pay with the points that you're earning through your American Express card. And as I was saying, there's various different partners here. Delta Airlines being obviously the biggest, and this is really distinguished from quite a few other card issuers, in that they have such a large number of these partners. And I think it's important to mention that these are sort of premium leisure brands. So they're attracting really relatively wealthy customers on a sort of global level. So this is American Express is basically a company with a premium clientele. I think you could describe it like that. And the partnership side really links with the next competitive advantage, which is sort of really linked, as I say, to the partnerships, which is the spend-centric model, which is the focus of American Express on generating revenues by making sure that the cardholders are just spending as much as possible, rather than trying to make money off the lending fees. So basically, if you compare American Express with its competitors like Visa and MasterCard, you get customers who are spending way more because they know that they're going to get the rewards from the partners. And also the merchants are getting big benefits out of this as well, because they know that American Express cardholders are going to spend effectively lots of money on their products and services. And then the final aspect here, which I think is very important to keep in mind, is that the American Express brand is very valuable. They've built it up, obviously, since 1850. This is a very trustworthy company, and they invest heavily in sort of promoting and protecting the brand. So it's basically ranked among one of the most. It's ranked as one of the most valuable brands in the world, and they also have a really determined focus on providing the best possible customer experience and maintaining that reputation that they've built up over all of those years. But I think the big question is why Warren Buffett likes American Express so much. And he did talk about this briefly in a recent, I think it was in 2019, the annual Berkshire Hathaway shareholders meeting. So he was asked about why he liked American Express so much. And essentially, he explained that obviously it's an extremely competitive industry. Everybody's a competitor, and even Apple, one of the other companies in his portfolio, has now taken out a credit card product in conjunction with Goldman Sachs. So there are lots of different competitors in this industry, and even sort of unexpected ones. But he explained that the credit card business isn't a one model business in any more of a sense that the car business is. So you can have Ferrari making a lot of money in their portion of the market, while Ford has obviously got their own segment as well. So he explained that American Express is growing around the world with individuals and small businesses, and it's not an identical product to basically anything else on the market, because it has such a sort of premium clientele. He described it as an extraordinary operation, and he also said that the renewal rate and the usage rate are the envy of everybody else in the industry. So I think dividend investors will also be very happy to see that the dividend has been steadily increasing. I mean, I've got a 10-year graph here, but the dividend has actually been increasing for probably 30 years if we just expand this. It's been increasing. It hasn't declined, I mean, since 1990, effectively. So this is a really impressive growth if we look at this. And one thing I'd also like to mention is that obviously the payout ratio is only 20%, so they're being very conservative in terms of the dividends they're paying out. So there's no danger of this really being threatened at any point in the future. Thank you very much for watching, and please suggest any improvements or any other companies you'd like me to cover. I would also really appreciate you clicking the subscribe button so I can bring you further investment research in future. Thanks for visiting, and see you in the next video. I'll also put some videos up here to show you which ones you might be interested in.